Ever since the financial crisis in 2008, we have only seen the housing prices increase. However, that might be about to change. All the housing prices have in fact already started to fall, and all the data is pointing towards a housing recession. The prices are decreasing, the demand is falling, and the sales has seen the sharpest decrease in the last 2 decades. In today's video, I'm going to talk about what is happening in the housing markets. Why are the prices decreasing and how will this have an impact on you? But before we start talking about why the home prices are going to crash, then it is super important to understand what is actually going on in the housing market. As mentioned earlier, then has the prices of homes kept on increasing ever since the Great Recession in 2008. However, in 2020, something happened that caused the prices to go up significantly, and that was the COVID-19 worldwide pandemic. The government, they wanted to reduce the impact of this pandemic as much as possible. And they did that by lowering the interest rate to almost zero. They started printing out money, giving stimulus checks to everyone in order to boost the economy. And that also includes the real estate market. All of that caused the average home in the US to increase from $322,000 in 2020 to $440,000 in 2022. That is an increase of close to 25% in just 2 years. In terms of understanding what changes the housing price, then here is all you need to know. Once you understand all of this, well then is the rest of the video going to be a lot easier to understand. When it comes to housing prices, well then almost everything is being determined by 4 different things. And that is supply, demand, interest rate, and the overall economy. That are the 4 most important things when you're looking at the housing price. The first 2, supply and demand, well they are fairly easy to understand. If there's more demand than supply, well then the price is going to go up. If there's more supply than demand, well then the price is going to go down. Supply and demand are unfortunately not the only things that does determine the house of a price. Therefore, in order to get a true indication of the actual housing market, well then we need to look at the bigger picture. Unlike the stock market, then is the real estate market moving really slow, but the data is always going to tell you where the market is going. And the recent data is a bit concerning. The sale of homes fell nearly 6% during the last month, which represents a 20% decrease from the same month last year. Mortgage demand drops to a 22-year low due to the increase in the interest rate. But the most important piece of data is that for the first time since the pandemic, home prices have declined month over month, with prices now being $10,000 lower than they were 30 days ago. As they explain, then the ongoing sales decline reflects the impact of the mortgage rate peak of 6% in early June, but it may stabilize as mortgage rates are now down to 5%. This increase in the mortgage rate had a significant impact on the total amount of buyers in the market, and the total housing inventory at the end of July amounted to 1,310,000 units, which is an increase of 4.8% from the previous month. This essentially means that fewer homes are being sold, and that increases the amount of homes for potential buyers. According to them, we are also witnessing a housing recession as the home price and the amount of homes being built are decreasing. However, nearly 40% are still selling at the full list price, and houses are staying on the market for a record low of just 14 days. This essentially means that we are in a housing recession. Less houses are being sold, less houses are being built. However, the price of homes is still the same, but there is a really good reason for that. To understand why, well then it is super important to understand the difference between nominal house prices and actual house prices. Most people are only paying attention to the nominal price, which is basically how much is the house costing today compared to how much did it cost in the past. And that is also how we do with all other things like stocks, cars, groceries, utility bills, and so on. But what everyone keeps forgetting is that in order to understand the true price of the house, well then we need to take inflation into consideration. When you take the growth rate of the house price and you subtract the inflation, well then you basically get a much better understanding of how much the price is increasing or decreasing. According to Schiller, the guy who both successfully predicted the dot-com bubble in 2000 but also the Great Recession in 2008, he believes that the housing market is yet again in trouble. As he points out, then the home price haven't fallen since the recession in 2009. Existing home sales are down, permits are down, It may not be catastrophic, but prices are expected to fall by more than 10%. On top of that, the Federal Reserve has also said that they are expecting to increase the interest rate again, which makes the cost of capital even more expensive, which means that getting a mortgage is now going to be more expensive than it was before. That is also going to have its impact on the housing prices and on the housing market. In terms of my own thoughts, well, then it basically seems like the housing market is slowing down, the prices are falling, the sales are falling, and there is even less competition now than there was before. According to Schiller, well, then we can expect a house price increase of 2.4%. But right now, the inflation is around 7 and 8%. That actually means that the house prices are decreasing between 4.6 to 5.6% during this year. I do think that is very reasonable. However, it's not something I'm thinking a lot about because I'm all about long-term investing. And I don't believe what is happening right now will have an effect over the long term. Thank you for watching the video. I hope that you liked the video. If you did, then please press the like button below the video and make sure to subscribe to my channel if you want to see more videos like this one in the future. Thank you for watching and see you in the next one.